Hey everyone, this is Bergman, founder and CEO of IRA Financial. Welcome to another episode of AdBits, where I will be sharing bits of knowledge about self-directed retirement. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, Bergman here, founder, IRA Financial tax attorney. On today's AdBits, I want to talk about 1099 contractors. Can you set up a solo 401k? So this is one of the first questions I get from people that are interested in learning more about the solo 401k. They've heard about all the great advantages, the ability to put away up to $58,000 or $64,500 if you're over 50. The loan feature, the ability to borrow up to $50,000, 50% of your account value, whatever's less. The ability to serve as the trustee and invest in stocks and also real estate or even Bitcoin. Great asset and creditor protection, ability to make pre-tax or Roth contributions. So people will get really psyched about the solo K. I mean, it really has all the features of the self-directed IRA, but you get the added features of high contributions and the loan feature, which a lot of people really appreciate. So once people are kind of fixated on a solo K, the next question I get is, okay, Adam, I want in. Am I eligible? So I go through the eligibility requirements. I say, what do you do? I say, well, I work full-time in company XYZ, but I have 1099 income. So right away, bang, I'm fixated on that 1099. And I tell them right away, these are the two requirements to be eligible for a solo K. You need to have a business, US-based business. Doesn't need to be even profitable. Just needs to be not a hobby. So there needs to be the anticipation of revenue, hopefully profit. And then number two, there cannot be any full-time employees. That means someone who works 1,000 hours or more in a year as an employee, not an independent contractor, but as an employee, that is a non-owner. So a non-owner, obviously someone who doesn't own any of the LLC interest or stock in the business. Now a spouse is not deemed an employee for ERISA purposes. So you have a business with your spouse, you can set up a solo K so long as you have no non-owner employees that work more than 1,000 hours. Even if it's just you as the sole business owner, and you hire your spouse and you give her a 1099 or him a 1099, that's not considered a non-owner employee, even if you give them a W-2 because they're a spouse. So those are the two requirements. That's it. It's pretty simple stuff. And the 1099 obviously is the most popular way to get self-employment income because there's lots of ways to earn 1099, whether it's consulting, whether it's performing other services for a company, whether you drive for Uber or Lyft or work for DoorDash. As of now, in the United States, those gig type of employment slash compensation arrangements are still not considered employer-employee. And although a UK court recently ruled that Uber and its drivers are actually engaged in an employer-employee relationship, which is a big blow to Uber's business model, it's still, that type of decision has not materialized in the United States courts as of yet. So right now, those drivers are considered independent contractors. So what's the big determination? How does the IRS determine if someone's an independent contractor or employee? And it really comes down to a bunch of factors. Number one, control. Right? How much control does the employer have over you? Are you forced to go to work 9 to 5? Are you forced to wear a certain uniform or act a certain way? Or do you have any other activities? Or are you just focused on this one particular business relationship? Your behavior, financial relationship, your actual relationship, and the facts do matter, right? All those facts I mentioned are determinative of whether you are a 1099 or a W-2. Now, for IRA Financial, we usually W-2 everyone. Unless you're doing like one-off consulting for us, if you're in the office, you're going to be there even 5 hours a week on a consistent basis, we're going to W-2 you. But if you're wiring our office, or you're doing some consulting, financial consulting or something else, yeah, we'll send you a 1099. Now, the nice thing of getting a 1099 is you can set up a solo 401k. And when it comes to contributions, it's based off your 1099 or your other self-employment income. So even if you earn $1 million as an accountant at a big accounting firm, if you only earn $6,000 as a 1099 for your expert witness testimony as a consultant on a 1099 basis, you're only able to contribute up to $6,000 in your solo K. Now, one caveat to that is when it comes to employee deferrals, the limitation is $19,500 or $26,000, and that's per individual. So even if you participate in 15 401k plans or 2 or 5 401k, you can never go above the 19,500 or the 26 for 2020 or 2021. So that means if you put $16,000 in your Apple 401k and you have $10,000 of 1099 income, you're under 50, you can do another $3,500 in your solo K. But also in the solo K, you're able to get that 20% profit sharing on your 1099 amount. So if you're a Schedule C or single member LLC, generally the most you can contribute is either $58,000 or $64,500, and that's broken down into two components. Number one, the employee deferral, which is the $19,500 or $26,000 if you're over 50, and then the profit sharing, which is 20% of your 1099 income, or 25% if you get a guaranteed payment from a partnership or a W-2. So let's take an example. Adam makes $20,000 a year, doing consulting work, and then I make $200,000 a year at IRA Financial. So I'm, of course, maxing out my 401k. That's what I tell everyone to do. So I, of course, am doing it. I'm under 50. So I put away $19,500 in my IRA Financial 401k. And let's say IRA Financial gives me a 4% match. I'm happy. So then I have this $20,000 of 1099 because I serve as an expert witness on self-directed retirement matters. How much can I contribute to my solo K? So I can't put any more employee deferral in because I already hit the $19,500. So all I can do is 20% of the 20 or $4,000. So I'd be able to do $4,000 of my solo K plus $19,500 to my IRA Financial plan, and then I get that 4% too. So I'm doing pretty well. But let me flip around this example. Let's say I only put in $12,000 to the IRA Financial plan, and I made $20,000 as a 1099. I have $7,500 extra contribution I can do out of that 20. And then I can do 20% of 20 for another 4. So that is the nice advantage, is even if you're participating in a solo K and you have a full-time job, you have the ability to use 2 sources or multiple sources of income to increase your contributions. So if you're listening, you're part of the gig economy, you do 1099 consulting work, think solo. It's super important. You have an amazing opportunity. You have an amazing advantage from someone who actually works at a business, because you can create your own 401k plan and you can customize it. Most employers, even the big ones like Google, are not going to give you more than a 5% match. So you'll be able to get that $19,500 or $26,000 if you're over 50, but you're only going to get probably 4 to 6% of your salary match. Whereas if you're self-employed, let's say you made $100,000 because you did consulting for Apple or Google, and you're under 50, you can do $19,500 plus 20% of your 100, giving you $39,500. So you're able to put away a lot more than you'd be able to put away at Google. Now, again, these are all elective. You don't have to put anything into your plan. You could set up a plan just basically for investment purposes. Although I suggest you make contributions every few years, because when you set up a 401k, it's supposed to be permanent based off the ERISA rules. So the IRS would not appreciate it if you just set up a solo K strictly as an investment vehicle to do real estate, for example, and then never made any contributions for multiple years. So I advise my clients every couple of years, even if you put $100 in, you want to show that you're using the plan and there's a permanency element to it. So there you have it. If you're a 1099 contractor, again, whether you work for Google or DoorDash or Uber, Lyft, and you have any type of part-time or full-time 1099 side income or full income, think solo. It's a great opportunity to maximize your retirement benefits, great opportunity to take control of your retirement from a contribution and also from an investment standpoint, really powerful creditor and asset protection elements. And you get that loan feature, so you can kind of piggy bank your financial needs, whether it's business needs, whether it's personal debt servicing, whatever it is. The Solo K is a very robust retirement vehicle. And because you're in the gig economy, you actually have an advantage over someone who works full-time at even a major corporation. You know, as I showed in my example, you can maximize your retirement benefits, also get the loan feature, and of course, get the opportunity to self-direct and diversify and do alternative assets, which I think is pretty cool. So there you have it. If you are a 1099 contractor, you should certainly consider going solo. And I'll tell you this, if I had the opportunity, I would put all of my clients in a solo 401k. Unfortunately, not everyone's self-employed, right? Not everyone's got 1099 or business income with no full-time employees. So I can't put everyone in it. But if I could, I would, because you get all the same benefits of a self-directed IRA, plus all the advantages I mentioned, like the high contributions, the loan feature, and the ability to shelter your assets from creditors in a very powerful way, inside or outside of bankruptcy. So I hope you found this podcast helpful. Hopefully, if you're a 1099 gig economy participant, I've motivated you to at least think about saving, think about going solo. And if I did, that would be really positive. If I haven't, well, maybe at least I'm planting the words in your head. So stay safe. I hope everyone is healthy. If you have any questions, if you're focused or interested in the self-directed retirement world, check out AdMail, which is another podcast I do where I answer 3 of the best client questions from the previous weeks. Also, Adam Talks, which is a podcast I've been doing for 4 years or so, and really basically takes it in tax attorneys' take on retirement, investments, and taxes. So check those out wherever you pick up your podcasts. Also, you can check out our YouTube channel. We drop generally 4 to 5 videos a week, and you can also check out the podcasts, which are always available on YouTube as well. So please subscribe. I think you'll really enjoy it. Otherwise, thanks again for listening. Thanks for your support. Thanks for watching. Thanks for subscribing. And I'll talk to everyone again next week.